Good afternoon. Hello. Just want to check if you guys can hear me okay. Put it into the chat. Let me know if you can hear me. And if you can see my screen okay as well. Oops. Hello. Hi, Juha. Hi, Hakan. Hi, everyone. How are you doing? As you fantastic. So I guess you can hear me. You can see my screen okay. We'll give it a couple of minutes before we get started. Take that away. Great. Thanks for that, Juha. So, we have the webinar series with IronFX today. If you have any questions, please, gather your questions, get ready. I'll be happy to address any questions that you might have. How has your trading been so far? Hope you guys have been trading well. Hey, Samuel. Hey, Ivan. Hey, and if you can as well, let me know where you're joining me from. Put it into the chat. Let me know where you're joining me from. I always love to find out where is everyone joining from. Finland. Wow. Netherlands. What time is it over there? Nice, bright and early, I guess. Seems like we have everyone from all around the world. Anyone in the Asia region? Good stuff. All right, just keep it coming. Let me know. And if you have any questions or, any particular pairs or views or analysis that you like to get through, let me know as well. All right, my name is Jin. Let me just change that a bit. Thank you all for joining bright and early on time. Let's get started. All right, so we're here today with IronFX doing a webinar series, live trading session or live trading analysis today. So I will be sharing with you some ideas, some thoughts, what I think of the markets, what I'm expecting or hoping to see. So please remember the disclaimer still applies, is that the information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material is just personal opinion of the author, myself, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. All right. So what it really comes down to is that I will be sharing with you some thoughts, ideas, views of the market, how I see things could be heading towards. If you are going to be jumping into any trades, please make sure you do your own due diligence. Check your own analysis. Right, if it lines up with mine, great. If you do jump into any trades, make sure you check your leverage. Right, make sure you're not over trading, because what tends to happen sometimes is that we look at every chart and every chart looks like a possible trade opportunity, and then we start thinking that you can enter every trade, leads to over trading, and over trading leads to a big risk to the account. Okay, so in my years of experience of coaching people how to trade, I actually realized that it's not so much a bad trade or a weak strategy that destroys accounts. Is more about over trading and over leveraging that destroys accounts. Okay, so just make sure you manage your risk, check your charts, check your analysis. Don't over trade and don't over leverage. With that as well, while I'm going through the analysis, if you have any questions, please feel free to put them into the chat. Let me know. I'll be happy to address any trading related questions that you might have. So let's get started. Take that away. How I actually approach the markets. I actually approach the markets a little bit differently from what I've seen most people do, is that the way I trade, I look into first looking at the news fundamentals. So I look at the fundamentals to tell or to get an idea of where prices should be heading, right? Where can prices go, where prices should be heading. And then after that, I look into the charts to determine, if I think that prices should be going up and the charts show me that it's going up, great, I'll be looking to buy. Or alternatively, if I think that based on the fundamentals, based on economics, prices should be going up, but it's actually trending towards the downside, what I do is I'll wait for it to bounce off a support level or retrace before I look for that buying opportunity. All right, so I look at both the fundamentals as in the news, and then after that into the technicals or the charts. So what we had today, today being Thursday, 20th of October, again, my timing here is GMT +8 at 8:30 a.m. All right, so at 8:30 a.m. this morning, we had the Aussie employment numbers. It was 36.3K, expected at 25K, came out at a 0.9. So not a very good employment change data being released, but unemployment rate staying at that 3.5%. What else we have tonight? The US Philly Fed Manufacturing Index. It gives us a bit of a view of how the US production levels are. It was a minus 9.9%, expected to come out at -5, right? Not 9.9, at minus 9.9, expected to be -5. You can see that previously we've seen quite big drops in terms of the Fed Manufacturing Index here. So what could happen? I think that we might actually see a weak number here, maybe even a -6 or -8 number here, which could lead to some or further dollar weakness being applied. Okay, so I'm anticipating tonight maybe some dollar weakness. We'll look into the dollar index chart later on. With that said, next I want to show you a little bit of the other news that's coming up as well. Tomorrow being Friday, we do have a whole bunch of Fed members speaking. Okay, we have the Chinese GDP numbers, could affect the Aussie dollar, but take it with a little bit of pinch of salt there. Tomorrow we do have the pound retail sales number and the CAD retail sales number. So you focus on, at this point, for tomorrow, you'll be looking at the CAD as possibly a little bit more volatile events coming up. Next week is going to be interesting. All right, next week is going to be very interesting because early next week on Monday, we have a whole series of PMI numbers to be released. PMI is the Purchasing Managers Index, right? Purchasing Managers Index, it gives us a view of the services industry in the Eurozone, the manufacturing industry in the Eurozone. It tells us whether markets are or the industry is expanding or contracting. And you can see that if it's over 50, it's expanding. If it's under 50, it's contracting. Okay. So you can see here that the Euro manufacturing PMI data last month was a 49.6, expected a 48.7, came out at a 48.5, in well under that 50 level. So it's in that contractionary phase. And services PMI as well was 49.8, expected 49.1, came out at 48.9. So in that contractionary phase as well. If these numbers do come out in the contractionary phase on Monday, remember this is Monday next week, doing a bit of a planning ahead, we might see further euro weakness, okay, because it's showing contraction in the eurozone in terms of the manufacturing and the services industry. For the UK as well, on Monday we have UK manufacturing and services PMI was 48.4. Looks like it might recover a little bit, right? Because last month we had 47.3, came out at a 48.5. So recovering slightly there in terms of manufacturing PMI and services PMI from 50 went to 49, right now back at that 50 level, bit of a revision to the 50 level. So it looks like we might see some level or slight good news in terms of the pound or the UK manufacturing and services PMI data. Okay, so again, Monday, expecting maybe a little bit of weakness in the euro dollar, and then some possibly brief strength in the pound. Okay, and then the US services PMI in under that 50 level, possibly looking at some weakness again. But these are small, relatively small news. We're going to see some fluctuation in price, but we're not going to see big price movements, right? We're not likely to see the big price movements because of this news. Where's the big price movement going to come from next week? It's not so much on Tuesday, but on Wednesday. On Wednesday morning, right, 8:30 a.m. GMT +8, we have the Aussie CPI. CPI is the inflationary data quarter on quarter. It was a 1.8. You can see that previously is a 2.1, expected 1.9, came out at 1.8. If inflation data, if the quarter on quarter inflation data for the Aussie drops, continues to drop, that might show some impact, right? It might show that the recent rate increases from the Reserve Bank of Australia is having some impact on slowing inflation growth, right? If it's slowing inflation growth, then that's going to mean that we're going to see possibly less or slowdown in further rate increases to come from the Reserve Bank of Australia, which could actually be a good thing, right? No more rate increases. We're not going to see that, might avoid a bit of a recession, avoid a bit of the economic slowdown in the Australian economy. Okay. Moving on from that, the big news event for next week is likely to come from the Canadian, the Bank of Canada, BOC, the Bank of Canada is looking to take interest rates from a 3.25% to a 3.75%. Okay, 50 basis point increase likely to come from the Bank of Canada. And why so is because you can see that just yesterday, oops, let's scroll back to that. Let me do that. So just yesterday, we had a Canadian CPI data being released, Canadian inflation data being released, and you can see that common CPI still climbing, right? Was a 6%, expected to slow down, 5.6, came out at a 6. Trimmed CPI actually takes away 40% of the most volatile CPI data, and it's still climbing or still sticky high. Was 5.2, expected to drop slightly, but it didn't, so it still stays at a 5.2. Okay, so because of this data that inflation is still high in Canada, that leads to the Bank of Canada likely to continue increasing interest rates from a 3.25 to a 3.75%. Okay, I'll show you what could happen there on the Canadian dollar when we look into the charts a little bit later on. So that's where I think the big fireworks will come on Wednesday for the Bank of Canada with the interest rate decision. And following on from that, we also have on Thursday, we have the Eurozone with their financing rate or the interest rate decision as well. Okay, so you can see here it was a 1.25%. expectation is that you can see here 75 or 50 basis points increase. The ECB needs a significant rate hike in October. Okay, so we're likely to see a big increase or big interest rate increase from the Eurozone on Thursday. That's going to bring big news or big price volatility for the euro dollar. Okay, for moving on from that, US advanced GDP numbers. I think, you know, after the Canadian interest rate decision, after the Eurozone interest rate decision, I think that we're not going to see too much of an event there on the US GDP. Okay, could ignore that a little bit because the euro dollar is going to influence prices more significantly than the GDP number. We do have the press conference following up from that. And then on Friday, right, on Friday, we have the Bank of Japan outlook report and monetary policy statement. All right, and then the press conference and a couple of news after that. This is likely to be the big event. I think that this could be the big event because the last time we had the Bank of Japan monetary policy statement, they didn't change anything. They kept interest rates at that minus 0.1%. But I'll jump onto the charts here now to show you what happened. All right. So far, so good. Any questions? Put it into the chat. Let me know if you're gathering good information so far. Okay, so while I load up the yen, let me know if you got any questions and if you're catching everything okay so far. All right, so this is a US yen on the H1 time frame. Let me just load up my chart. Okay, so this is the US yen on the H1 time frame. I'll just zoom out and show you what happened there at the last meeting. Let's go H4. What was the last one here? Okay. At the last meeting, which was in on the 22nd of September, we actually saw that the Bank of Japan, you know, didn't change anything at that point. Policy still held the same. And then we had a key level there at that 145 level. Oops. Key level at 145. It tested once, got turned down. You can see tested once here. It went down. Tested again, and it dropped. Right. The next time it went up, it tested. It came as high as that 145.90 level, and then that's where we saw the Bank of Japan intervene. Right, an intervention from the Bank of Japan. At that time, they were saying that the yen was too weak. It broke above that 145 level, and then we saw the Bank of Japan intervene, crashing the US yen down from 145.90 all the way down towards that 140.33 level. Right, a big move towards the downside. Pretty much about 560 pips towards the downside as an intervention from the Bank of Japan. However, that move towards the downside was quickly reversed. You can see price went all the way back up. Not only did it go back up, it went even higher. It broke above 145. Right now, and the market consensus is that the 150 level, which we have just hit, right, the 150 level was, or it's likely to be the point where the Bank of Japan could say that, hey, that's enough, time to intervene again. We haven't seen, as much as it's gone up and hit the 150 level, we haven't seen the intervention from the Bank of Japan yet. What I believe is that they're likely to wait for a news event. For example, the policy decision on Friday next week, before they announce or they take action to intervene into the markets. What that means is that it could be quite similar to what happened here at the 145 level. All right, we could see price test, turn down a little bit, test and turn down. So I'll zoom in a bit here to see. All right, we could see price test this level, turn back, test this level, and then turn back down a little bit, test again, turn back down one more time to break above. What happened to my lines? Test, come back up, test again, come back up, right? So I think that we could see that happen. I think that we might even see the yen come very close towards that 151 level. So very similar to what happened the last time round. Right, the last time round, we were all expecting on the markets, we're expecting 145. It broke above 145. It came to 145.90 before a big drop. What I think could happen here is we're going to see it test a few times, break towards 151 before we see that big intervention to come from the Bank of Japan. All right, how I'm actually approaching the US yen right now is that I've actually have a pending sell limit towards the downside. Right, I've got a sell order towards the downside. My order right now is placed at 149, just below that 149 level. I've got a tight stop loss at about 30 to 40 pips there. My take profit is 200 towards the downside. Okay, so every time, and I started this early this week. So what was it? Let me see. I did that on Tuesday. So on the 18th, right? On the 18th, I actually about that point that I had it there. After that retrace, I started thinking of that, so I actually had it at that point. Yep. So at that point, I had it at 148.50. I had it at 148.50. I was thinking that was a trial intervention. Didn't happen too strongly. So I was thinking whether the next time it breaks lower, can we see a big move towards the downside? Didn't happen. It pushed higher, and then I just kept moving this order up. I just kept moving the order up. Right now, it is just below that 149 level. Okay, so what I'm looking for is that I know I won't be able to catch the full move, right? Even if it comes all the way up, I might have my order there just below 150, right? This is 150. I'll have it just below 150. If they intervene, I'll give up that much, but my trade could trigger. Very tight stop loss, and I'll see a take profit towards the downside. That'd be a very good almost 1:4 risk reward ratio towards the downside, just to try and catch the intervention from the Bank of Japan. All right. So every time price moves up, I'll just keep moving my order higher and higher. If it breaks above, I'll keep moving it up, just so that once it turns down, I'll be able to catch that move towards the downside. All right, so that's my view for the US yen, anticipating and waiting for that possible intervention from the Bank of Japan. And why we think that it's likely to happen is because you can see here as well, everyone's waiting for it. The yen slides past key 150 per US dollar mark. Markets are braced for intervention. All right, I think that not likely it's going to happen today or tomorrow, maybe, right? But I think more likely, or it's going to have a bigger impact if it happens next week on Friday. So with that was the US yen on the H4 time frame based on the intervention. Let's look at the US CAD. All right, so US CAD right now at that 131.3740 level. Okay, we saw last night that we had the CPI data being released from the Canadians, and it was a bit of a mixed number. but we saw that inflation data was still high in the Canadians, and that's why we actually saw price bounce around with not much direction at that point. Okay, I'll take that away for now. The main levels here is that price has stayed below that 1.38 level, right? Because price has stayed below that 1.38, it could mean that the upside potential is a bit limited, right? Not that it's not going to happen, it could be limited. If it does push higher, it's going to be likely dependent on the dollar, on the US dollar to push price higher. How high can it go? The next key level is at about 1.3976 or 75. Okay, so I will only be looking to buy it up. I'll only be looking for this move towards the upside if price can climb and break above this resistance level, this 1.38 resistance level. Then I would be looking at a buying opportunity about 1.3830, take profit 130 pips towards upside, stop loss just below that support level now, right? At about 40 to 50 pips, you're looking at a 1:2.7 risk reward ratio towards the upside. All right. However, if price fails to break above this level, all right, and we actually do see later into next week, the Bank of Canada increases interest rates 50 basis points. We might see further volatility. I'll be looking to see whether price could come down, break below this swing low here, this 1.3658 or 55 level, right? If price can come down, break below this point, then I'll be looking for selling opportunities at about 1.3620, so below 1.3620. Again, stop loss at about that 60 pips. Take profit maybe at about 100 and almost 120. You're looking at a 1:2 risk reward ratio towards the downside. And why is it here? Is because we have a support level there. Okay, so I might actually move this a little bit higher, just slightly less than 1:2. Okay, we could actually do that. So at about 1.3630, 120 pips towards the downside, 1:2 risk reward ratio, waiting to see whether what's going to happen on the USDCAD, if it breaks below that support level or if it bounces and breaks above that resistance. In between right now, I think we're going to see this kind of price movements for the time being. Going to stay within this range, no real clear directions until the interest rate decision to come from the Bank of Canada. All right. Any questions so far? You guys getting everything all right? Good stuff. Fantastic. Okay, good. If you have any questions, please let me know. After looking at the USDCAD, let's look at the euro dollar, because there is an interest rate decision to come from the Eurozone next week as well, or from the ECB next week. Right now, the euro dollar trading at 0.9779, right? 9779 or 9780 at that point. Yesterday, I can tell you that yesterday I was on H1 time frame. I was looking at the euro dollar as it broke below that 9820 level, right? So I saw this point as a swing level and as a bit of a support. You can see that it tested here and bounced up. It tested here and bounced up. I actually had a trade that I got into selling it down as it broke that support level. All right, so I sold it down, had relatively tight stop loss, about 30 pips. Stop loss at about 30 pips. Take profit was all the way down about 90 pips, or about 100 pips. No, wait, 90 pips towards the downside, right? Why there is because I had a support level there, right? So it dropped all the way. I was expecting it to drop all the way down. It came down, formed a couple of pin. I closed out at that point there. No, at that point there, right? So I waited, it dropped, thought it could drop further, but the indecision at that level there, decided to close out the trade. Also because I noticed that there was a bit of a interim level there at that 0.976, almost 9760 level. So I closed out my trade and I'm sitting there waiting to see whether it's going to drop further again. I got a question here is what's the best time frame to do analysis? What I would say is that I think that most traders or most retail traders at this point are doing this part-time. You got a full-time job, you're not looking at charts all the time. So, you know, I would say that you should be looking first at the H4 time frame, right? Look at it on the H4, get your support levels in, get your resistance levels in, identify why support and resistance levels is to identify the possible upside and downside potential, okay, based on the H4 time frame. And then if you can stick onto the H4 time frame to enter a trade, that means wait for it to break a level before you get in, right? Or wait for it to bounce off a level before you get in. If you can't, then you have your levels based on H4, and then you could look into the H1 to get into the trades, right? So what I do, I look at H4, draw my lines, support levels, resistance levels, trend lines. Then I go into the H1 time frame to enter my trades based on the H4 support and resistance levels. When there are news or when it's a bit of a higher volatility event, then I'll look into the M15 time frame for shorter term trades or scalping trades. But I always suggest to most retail traders or most new to intermediate traders to stay away from the smaller time frame, right? Stay on the H1, try to avoid the smaller time frames because that gets a little bit more more volatile, more emotional, right? So stay on H4 and H1 should work for you. Hope I answered your question there. With that, I forgot what was I saying about this now. That's a euro dollar. Okay, so euro dollar right now I'm looking, right? If later into next week we do see, and I'll show you again here. If later into next week we do see the rate increase and a relatively hawkish comments from the ECB, especially during the press conference here, what I could anticipate on the euro dollar, okay, getting back to the H4 because we're looking into next week. What I could anticipate on the euro dollar is that we might see a bit of a bounce, right? So I'll take that away. We might see a little bit of a bounce. You see it's formed a good support there. Wouldn't enter any trades at this point. I'll wait for it to either break lower or bounce back up, close above this point for that upside move. Okay, to be extra safe for in terms of the euro dollar, your level here at about that 0.9880 level, you can see that it was a swing level here, right? We've got a bit of a reaction there, and then this points here. I'll wait for price. I'll be looking for price to possibly do that and break out, right? So I look for it to break towards the upside there. Okay, bounce around. It needs to break above that 0.9880 resistance level before we could see the euro dollar come up towards back towards that parity level again. Okay, zoom in out a little bit, back towards that parity level again. Could it go all the way to this 1.02 level? Possibly, but I think that for that to happen, we're going to see significant weakness in the US dollar, which seems to be a bit unlikely at this point. Okay, so I'll be looking instead whether once it breaks above that resistance, there's a buying opportunity towards the upside. About a 30 pip stop loss, about 100 pips take profit, a 1:3 risk reward ratio towards the upside there for the euro dollar. This is when it comes to the news decision into next week. When breakout happen, how to count stop loss for entry? Okay, good question. So in this case, like for this as an example, once, if we look for price to break above that resistance level, I still would always have my stop loss just below that support level. So it was a resistance level, now turned support. I always have stop loss below the support level. Okay, and then take profit towards the next resistance. Let's say that if you missed the breakout, you're a little bit late to the breakout, and then price was already up there, and then you come to the point where you realize that stop loss is too big, 65 pips is too big. What most traders would tend to do is to still stick with a 20 to 30 pip stop loss, a tight stop loss, hoping for a continuation towards the upside. I think that's very dangerous, right? Because we're going to see a lot of volatility. We're going to see price bouncing around. What could happen from there is that you might actually see price, you entered there, bounce up, come back down, hit your stop loss before going up to your take profit level. Okay, so I would still, even if you break out, consider whether I'm going to have a stop loss there. And if that risk to reward and the risk management doesn't make sense, then I would say, okay, I'm not going to enter the trade. It would be something that I would have just missed on, not enter that trade. Let's see what happens as price climbs up towards that parity level. Is it going to hit and retrace back down, or is it going to break above? Then I might have a better opportunity towards that 1.02 level. All right. So no matter what, I always want my stop loss either below the support level or above that resistance level. Right? Always below support or beyond the resistance level. So that's the euro dollar with the news likely next week. With that, USCAD we've done already. Okay, then we look at the dollar index. Right, so the dollar index has been a little bit weird over the last couple of days. Is because it was trading at that 113 between, I can show you here, between that 112.85 level and that 113.50, about 113.50 level. Right, it was trading between this range, and then it tried to break up. Didn't happen late last week. It came back down, bounced back up, and then early this week it broke down from that 112.80 level, came down towards 111.85, right? It came down towards 111.85. What we saw today, or yesterday and today, was last night was that it climbed back up, but it failed to sustain a move towards the upside, consolidated along this 112.85 level, right? So it's consolidating there. And that's also the reason why I'm looking at the US yen, I'm looking at the US CAD, the euro dollar we just spoke about as well, that, it looks like it's going to consolidate for a little longer. Maybe into this end of this week, still consolidate into next week. Then we're likely to see some bigger moves on, driven by the news and also the dollar index. Okay, so looking for a reaction here, I think what we could see is that price could trade lower, bounce back up, and then finally break, and then maybe even come in the longer term back up towards this 114.75 level. Okay, so I'm looking for this bounce or a bit of wide consolidation between 112.70, 112.85 and 111.85. Consolidate in this area before a possible breakup towards the upside. Could the US dollar break lower? Right? If it does break below 111.85, a bit, I think that's a little bit unlikely unless we see a lot of strength in the euro or in the pound, right? Which seems a little bit unlikely. If it does break below 111.85, then we could see, right? You can see it right across here, that 110 level. We got a bit of a swing levels here, a good resistance level here, and then a good support there. So that's the reaction there, and a good support level here. If price does break below this point, then we could see the US dollar or the dollar index breaking lower towards 110. Okay. Any questions? Any other questions so far? Not yet. All right, great stuff. With that, one more thing I want to share with you, or a couple more things I want to share with you, is the pound dollar. Right, the pound dollar has been a little bit. Oops, not that. Right, the pound has been a little bit crazy. That news here, right? We saw a reaction there at 1.12 level, the 1.12, about 1.1230 level. That big drop, right? That big drop was because of the introduction to about tax cuts, biggest tax cuts in 50 years. Markets got concerned whether the UK government were being a bit too optimistic. They were going to cut on their revenue stream. That's why we saw the pound dollar drop so significantly, almost immediately down towards that 1.0360 level, right? Big drop towards the downside. And then because of that big drop, you can see this candle here. Okay, maybe not that one. Right, you can see this candle here. The Bank of England came out and said that they're going to buy long-term government bonds just to try and stabilize the markets. It did have a good effect because we saw prices continue because of that introduction and a slight intervention. We saw that price push back up, right? It came back up towards that starting point of where it fell, right? It pushed a little bit higher as the UK governments spoke about U-turning, right? U-turning on their tax cuts decision, right? So it pushed a little bit higher again, but then found a very strong resistance there. Okay, you can see found a very strong support and resistance level there at almost at 1.15 level, right? So it went up to that point, failed to break above, and now it's been wide consolidation, but overall still testing that 1.12 level, looking like we're going to see a potential drop towards the downside, right? So I would have this level there. So it's within this range. It's trying to figure out, is it going to push towards upside or the downside? In my view, I'm still looking for that downward move, right? So about 1.1140, very tight stop loss, about 40 pips there, just above that range. Take profit at about 180, almost 200 pips towards the downside, almost a 1:5 risk-reward ratio towards the downside there on the pound dollar. If it does break strongly below this 1.1160 level, I would look to get in at about 1.1140. Right, so I'll give it a bit more space, let it drop before I look to sell it down towards that level, that support level there. So looking for that similar move right? That similar move that happened early October. Okay. If it does bounce back up towards the upside, for me, I'll be a little bit cautious. I wouldn't be looking to buy it up just because, you know, as much as I feel that it can climb towards that 1.15 level again, that was one time that climbed very nicely. The next time following on from that, it climbed halfway and dropped strongly. Again, climbed halfway, dropped strongly, climbed a little bit more, but continued to drop. So I see that it looks like it's struggling, and we have a little bit of that downward channel to a downward trend line. So I think that we might see, even if it does climb up, it might struggle to climb strongly. I still think that we're going to be a bit more downside move. And I'll also share with you here is that if I take that away for now, you can see that we got a bit of a shoulder, bit of a head. All right, if prices do come up and then start turning back down, then we're going to get a bit of a shoulder there with a good neckline at this point. Right, so head and shoulder pattern formation looks like it might be forming. If we do see a bit of an upward move on the pound dollar, then looking for it to break below that neckline, we're going to see quite a good downward potential onto the pound dollar, right? Also formed with the head and shoulder pattern. Okay, so quite a lot of things there. On the pound dollar, I'm still looking for that selling opportunity. With the next one on the US Swiss franc, okay, I'll show you on daily time frame first. You can see that the US Swiss franc tested that 1.0066 level, right? So the last time it came up towards 1.0066 there, we saw a big downward move, came very close, we saw a big downward move again, right? And then it's formed a little bit of another level there. Okay, now take that away. We'll do that one there. Right, so it's formed a little bit of another double top there as well. Okay, so right now, the US Swiss franc is again back at that 1.0066 resistance level again. All right, what I'm looking for here is whether price could reject, show me a stronger rejection of that resistance, like what happened here the first time and also the second time, right? Rejecting that level, can we see a big downward move on the US Swiss franc back towards that support level there? We saw it happened here once, you know, this quite a strong support level at that 0.9556 or 555 level. Again here, and again here, right? So every time it's hit, it came quite close to that level before bouncing back up again. So I'm looking for, and this could be something that you want to prepare for, you want to put high on your watch list, whether price could shoot down. I wouldn't do it straight away, you know, give it a bit of space at about that 9926 level or below 9930. I have a stop loss about quite a big stop loss there, about 180 pips. But your take profit is at about 350. Yeah, almost a 1:2 risk reward ratio towards the downside. Remember, this is a daily on a daily time frame. That's why we have got a big stop loss, a big take profit. This might be a trade that if it does happen, you will want to size down on it, right? Because it's a big stop loss, so you're going to size down on that trade. But we could see a big potential move, a potential big move towards the downside. What if it breaks above that resistance? Right, then you go to the weekly time frame. You can see that the next previous high was about 1.025 level. Oops. Right. So if it does break above, we're going to see possibly a bit of a limited upside potential. I wouldn't be looking to buy it up. I'll be looking for it to test that level and then looking to sell it back down, because you can see that again, back to the weekly, the last time it hit that level, it went straight down again. Okay, so I'm still looking for selling opportunities on the US Swiss franc, either reacting to this 1.006 level or towards that, if it does climb up, reacting to that 1.0240 level. All right. With that, looking at the what happened here? Last two charts, look at the Aussie dollar. Right, Aussie dollar not being very exciting at this point. We've seen reactions at that 0.6345 level, right? A test, a reject, test, reject. I was looking for this to test and reject towards, back down towards that 6171 level, but it came halfway, didn't happen. Now it's bouncing back up. So I'm still looking for that move, a test, and then that possible downward move. Okay, I wouldn't be looking to buy the Aussie up. There's no real reason unless we see that big dollar weakness come into play, but 0.6345 level seems to be holding quite strong. Okay. Then lucky last, Kiwi. Kiwi, same thing, very similar to the Aussie dollar. Right, we got a key support, key resistance level there at 5717, or even if I pushed it a little bit, about that 5725 level. Okay, so we're looking for it to come up, test that level. The next resistance level is at 5813 or 5820 level there. I think that we're likely to see on the Kiwi dollar a test, and then that rejection towards the downside again, back down towards that 5511 support level, that swing low, that previous swing low there. Okay, but you can see that at this point, with not a lot of news expected for the Aussie and the Kiwi, I'm a little bit less attracted to trading the Aussie and the Kiwi. I think a lot more opportunities on the yen with that possible intervention, on the pound dollar, on the US Swiss franc a lot, and especially the USDCAD, with the interest rate decision coming up, a lot more opportunities on those pairs rather than trying to force out a trade on the dollar index. Okay. At this point, any further questions as we come close to the end of the session? Any further questions? Alrighty, no, nothing yet. USDCAD dropping, you can see it coming down, looking for it to test and stay within this range. We have both that buying opportunity towards upside and selling towards the downside, depending on how price reacts to those support and resistance levels. Okay. Okay, so if you have no further questions, I've gone through pretty much all the major currencies there. With the news, just bear in mind that we have a whole bunch of news release. Oh, look at that. Aussie dollar vulnerable near 30-month lows. Okay, so we're possibly looking at further downside there. Yeah, so just remember that we have a whole lot of news next week. Monday, going to see some volatility, but not big price movers with the PMI data. But we're going to have the CAD with the interest rate decision. We have the Eurozone with the interest rate decision. And then possibly some fireworks to come for the yen with the policy decision on Friday next week. Okay, so with all that said, I'll take an end to the session here. Remember, trade well, trade safe, and take care now. Thank you, Juha. I hope you had a good session. I hope you enjoyed the session. Take care now. Bye-bye.